think it was George Soros, and I'm not a fan of George Soros, but one thing he said that's really important is that when you invest, you need to determine your common denominator, what currency you think in, because if you think in Argentine pesos or Brazilian reals or Brazilian cruzeiros back in the day, or the Venezuelan bolivar or the Zimbabwe dollar, if you think in those currencies and you have investments in those countries in the stock market, you did great. But all those investments became worthless because the currencies collapsed. So that's why it's so important. Wednesday, September 17th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, I've been covering this topic for about 2 years. It was actually Doug Casey and Matt Smith who twigged onto this book, The Great Taking, back in 2023. And thanks to them, I twigged onto it. I bought the book, I read the book, and actually they had a PDF file for the book before it was published. So I've done a few videos about this, but today we're gonna talk about why I think the Great Taking is already happening, and the reset too. I've been saying this for quite a few years. Yes, it could accelerate at a certain point, and it could become a lot more visible, and I think we're close to that. But I have a different idea to Mr. Webb, David Rogers Webb, about how they're going to do it. Before we go further, many of you have asked me in the past where to buy gold and silver to protect your savings. And my first reaction is do your homework. Do your homework. Go to the most reputable dealers that have been around for the longest. But trying to help you, I've also provided you with a couple of precious metals dealer that I've dealt with in the past and still deal with, and that I can vouch for. Well, so in the US, it's Miles Franklin. All the details are below in the description. There's a landing page there. And here in the UK, it's Gold Investments. We have a few promo codes with them. So back to the Great Taking. Yes, David Rogers Webb. He's got a little bit in common with Scott Bessent because he used to work for George Soros hedge fund. I'm not trying to say anything here, but he's a very experienced financial operator. I would say he's done a lot of research, and basically what the Great Taking is saying is that in a deflationary collapse, where everything implodes, the economy, everything, people go bankrupt, they've got the legal wherewithal now to take your securities. And by securities, I mean stocks and bonds that are registered. And nowadays, unfortunately, they're electronically registered. And he said they've been preparing for this, not just via the securities side, but the legal side for like 50 years. And that he thinks it's going to happen. It's possible. And for those of you who are concerned about the Great Taking, and I do, the Great Taking in Mr.'s Webb version, for those of you who are concerned, you can try to get your stock and bond certificates from your brokers. It's not as easy and as simple anymore. The other thing, and I have some concerns about it as well, of course, even though I think the probability is slim. The other thing is just to not be in the financial system and have assets outside the system. And that's why gold and silver are so interesting. And we're also going to come in a minute to gold and silver and the price of gold and silver, what it's actually telling us. The other assets are land, real estate, antiques, luxury goods, that anything that holds value over generations, I think, is good. And of course, you need it well protected, well stored and hidden. I mean, the very wealthy, they store it in mountains in Switzerland. Yes, there's a lot of safes in Switzerland in the mountains. Of course, not all of us can afford to do that. But anyway, that's the way I see it. If there is a deflationary collapse, and I think it will be difficult to have one, because the politicians and central bankers, unfortunately, their only tool really is that, because they're fighting for survival. So now let's switch to why I think this great taking and even the reset, if you want to call it, is happening. You've probably noticed, if you follow the financial markets and investments from the mainstream media, especially outlets like Bloomberg, CNBC, the FT, they've been, of course, headlining how the FTSE here in the UK, the FTSE 100 index, or the Dow, S&P, they're all at new all-time highs. Everything is gangbusters. But I think it was George Soros, and I'm not a fan of George Soros, but one thing he said that's really important is that when you invest, you need to determine your common denominator, what currency you think in, because if you think in Argentine pesos or Brazilian reals or Brazilian cruzeiros back in the day, or the Venezuelan bolivar or the Zimbabwe dollar, if you think in those currencies and you have investments in those countries in the stock market, you did great. But all those investments became worthless because the currencies collapsed. So that's why it's so important. And I think the rapidly rising price of gold, especially in these last 2 years, of course, it's been doing it since the beginning of the century, but in the last 2 years, what it's telling us is that we're moving towards some kind of third world currency denouement, like some kind of currency event. And by that, I mean the common denominator, the dollar, is not important anymore, and all other currencies are not important anymore. So when I hear people say, oh, the FTSE made a new all-time high, the DAX or the Dow, the NASDAQ, yes, of course, in confetti, anything in terms of confetti, anything looks good. So I'm going to show you a few charts here, and it also applies to bonds or treasuries. And the reason why I add those in there is because most investors, well, the 99.9% of investors are positioned because of advice from the experts in this 60-40 portfolio. What's a 60-40 portfolio? Well, they say you need to have 60% in the stock market, in equities, that kind of asset class, and the other 40% in bonds, which is fixed income or debt. So we'll start with the granddaddy of these ratios. It's the Dow Jones Industrial Average to Gold ratio. So that's basically just the Dow priced in gold, which is how it used to be domestically for the US before Roosevelt banned gold in 1933. So that's the other thing as well. When we look at the stock market crash in 1929 and the few years after that, we're not really looking at the same Dow as we have now, because now the Dow is not priced in anything real. It's priced in ephemeral fiat dollars. But anyway, I said to you that I think the reset really has been going on for quite a while, and it could be accelerating now. So this is how many ounces of gold it takes to buy one Dow Jones Industrial Average Index. And you can see that it topped back in late 1999, just above 44. And ever since then, we've been in a bear market, really. We have had a bear market rally, in my opinion, in the Dow since 2011, when we bottomed around 6 in this ratio. But now it's keeling over again, and I think it's going to accelerate. And yes, we're going to go towards 1. In my opinion, it could be even less. What would that mean? Well, that would mean you might only need half an ounce of gold to get one Dow. The price at which gold or the Dow will be in fiat dollars is difficult to say, but what I'm trying to say here, I think, well, 99%, the vast majority of people don't have a clue, don't realize that they're actually losing wealth despite the fact that their fiat dollar portfolios look good. And I think this is the most important chart in terms of the 60 proportion of the 60-40 portfolio. Excuse me. So that's for the US. Let's look at the UK. I've done the same thing, the FTSE 100 index to gold ratio, and it's the same story. And it's gonna, yeah, it's breaking down here too. So yes, it's really important that we know what we're denominating our wealth in, and I think denominating our wealth in fiat dollars or fiat pounds or fiat euros is a really big mistake right now, because as I said, we're entering a major currency event. In terms of the 40 part of the portfolio, it's the same story. I have reversed it here. I've done the price of gold, or the price of gold, the price of gold in bonds. So, and this is the 10-year Treasury, constant maturity security. And you can see that back in 2000, the price of gold was only just above 2, and now the price of gold is at all-time highs versus treasuries. It's at 36. So that means that bond investors are also losing out, despite the fact that in dollar terms, of late, bonds have gone up, yields have gone down. But yeah, it's the same story. And I think that's what's going on. That's how they're taking wealth from you. That's how they're debasing the currency. And what are these people doing? The very wealthy, the people in the know. Well, they're buying hard assets. They're buying gold hand over fist. You can see the central banks accumulating a lot of gold. They're also private high net worth individuals are buying a lot of physical gold and silver. People are starting to buy a lot of miners. They're doing it also through the private equity market, maybe because they're concerned that there could be a great taking through the public markets, through private equity. If you own privately the company, it might be a bit harder, but anything's possible. So that's why I think the great taking is happening already. And I said earlier I was going to tell you how you can fight it. Well, by being outside the system, by hedging your, being outside the system, but also you want to stay in the system because this deflationary collapse, great taking might not happen. And David Rogers Webb says that we need a deflationary collapse for this great taking. But in terms of hedging the value of your wealth, because that's what really is happening there, like fleecing you without you knowing it, I think gold and silver are the best things. They're money. They're very liquid. Yes, antiques, like classic cars, wines, real estate, land. That's all very good, but it's not as liquid. You can't really like use it as money whenever you want, even though I think it's important to have. And you will see that the very wealthy are positioned in such a fashion. I remember Jim Rickards went to Italy some years ago, and he met with very wealthy families that have been around, well, that have had wealth for centuries, and their secret, apparently, according to him, is gold, land, and wine. So, yeah, that's how I see things. Ultimately, though, I think the most important thing as an individual is that you have peace of mind, that you are well in your mind, in your body, with your family, with the community, and that you are aware of what's going on. Yes, money, wealth, savings is important, but it's not everything. You can always rebuild it. That's what I'm trying to say. But it's also good to try to keep a hold of it, because you don't want to go through the heartbreak and the difficulties. So this is how I see it. It's happening. It has been happening for, well, since the beginning of the century, I would say. And it all comes down to what currency you measure wealth against. And ultimately, the reason why I do it with gold is because it's been the ultimate measure of wealth for thousands of years. It hasn't been paper money. Paper money or the paper dollar of the last 54 years internationally, and since 1933 domestically, it's not real wealth. And it's not a measure of real wealth. I mean, it's the ghost of money, right? It's the ghost. It's paper. It's only a promise, and those promises, they can be made willy-nilly, and they are still being made willy-nilly by the governments and the central banks of the world, and we're paying for it. And with that, I'm going to wish you all a very good day. Take care. Bye.